Well, let's get some analysis on what to expect from the local market, particularly at the Open. We're joined now by Chris Weston from IG in Melbourne. Chris, great to see you there. Yeah, it's going to be an interesting one, isn't it? I guess, firstly, if we could just focus on the currency and the moves overnight, what are we expecting in the lead up to the employment numbers, and how could the Aussie trade depending on how those numbers come through?
Yeah, well, just in the broader currency terms, Kiwi's off to a bit of a flyer after the RBNZ statement. But I think in terms of the Aussie, I mean, what we're seeing in the last couple of days, if you look at the price action, 104.85 seems to be the ceiling. And I think if you just look above that 105, we know there's a lot of corporate offers around those kind of levels. Real money accounts have got offers around there. So it's going to be some pretty hard graft, and you're getting to the sort of top end of the range. I know there's a lot of people looking to sell around the 105 level, so a good employment number today could see it materially move higher. We are starting to see it trickle down to the overnight lows, though, around that 104.41 level. But I think you know, price action on the Aussie overnight was really dictated to by price action in the S&P. A lot of thoughts and concerns, I suppose, and sentiment towards the fiscal cliff negotiations. So I think the Aussie just simply tracked once again what happened on the S&P. So futures today, S&P futures could dictate play as well. But I think the employment number is key. The RBA do look at it. It's obviously not one of them. They don't have a tier two remit like the Fed do, for example. But they will be looking at this as a part of the monetary puzzle. You know, if the business community or the mining community is going to pull back on capital expenditure throughout 2013, clearly the employment space, people need to be employed to be able to pick up the slack from it in the non-mining space as well. So this is very, very key. It's not just about the level of jobs that are going to be created or lost today, it's about the quality. Remember, we're going to see that mix of full-time against part-time as well. So a good number today could be very good for the Australian dollar, but I think a big spike up, people will be looking to sell into it around that 105 level today.
Just take us through your thoughts on the session overnight offshore. Interesting, I know you were sort of thinking that it was quite good to see some buyers on the dips, particularly in the US.
Well, we're seeing just lifeless trade, really. I mean, I think until we get a break of 14.24 on the S&P, which for me is a pretty key level. It was Monday's high, but that was also the 61.8% retracement of the year's high that we got to in September down to the recent low of 13.34. So I think we're going to need to see a break of that level at 14.24 to try and get some more momentum-focused buyers into the market. But we did see some good buying from those lows. I think if you actually look at the data that we got overnight, it was generally at the margin quite positive. The ADP job numbers are a little bit lower, but I think a lot of this has to do with the weather effects of Sandy. I think so. The economic data in the US perhaps isn't getting as much attention as it would have done, say, a month ago, for example. But the ADP numbers were still okay, and the service numbers that we got from the ISM service numbers were very, very good last night. They beat expectations. They grew. If you look at the new order subcomponent of that, was very, very strong at 58. The employment component both went above 50, which was in expansionary territory. I think part of that was how part of the reason why the market saw good buyers below the 1400 level. And I think the other bit of piece is the market clearly is giving the benefit of the doubt to the fiscal cliff negotiations. Some Republicans wrote a letter to Boehner basically saying that they're willing to do or to explore all options about at the moment, and that would potentially include raising revenues and raising taxes on the top 2% earners. Of course, Mr. Boehner seems loath to do that at the moment, and Mr. Obama, the president, obviously is suggesting that they could actually have the negotiations wrapped up within weeks if John Boehner is actually going to negotiate on these tax increases that he's proposed as well. So I think, you know, that it does seem the market seems to be giving us a benefit of the doubt. Unfortunately, we got to 14.18 on the S&P, and towards the back end of the session we did see sellers creeping in, and I think if we'd actually seen a better price action, a better tape from Apple, then clearly the S&P would have been better and we would have been provided with a better lead today. But it does seem that a lot of people are speculating that their market share further down the line will be, especially in the tablet region, will be lost. Apple, obviously a massive component of not just the Nasdaq but the S&P as well, and that was down about 5% when I last checked.
Yeah, I think I just saw pop up on Reuters that Apple had its worst percentage decline, daily percentage decline in 4 years, down about 5-6% there today. So and as you mentioned, we can't underestimate the size of the weighting that it has on the Nasdaq and the S&P 500. So Chris, looking ahead then to our market, what's the IG call for the Aussie market open?
No, we're going for something a pretty tepid open, to be honest, Bridie. We're looking for an open about 5 points higher. I mean, if we can get a close above 45.34, which was Monday's high, then that would be fantastic. We'd create a higher high, and obviously, therefore, you've got the uptrend that's been in place will remain intact. That'd be great to see. But at the moment, it doesn't look like that's going to be tested. I think there's going to be a few things that need to really come into its own. First of all, BHP looks remarkably, despite the quite tepid opening call, the BHP's ADR is actually matching up about 1.6%, around 34.84. So, you know, given that's weighting 11-12% on our market, it's quite interesting to see why we've got such a flat open, but such a strong opening call on BHP with the ADR there. So you wonder where the weakness is going to be coming to offset that, but there's no real clear signs as to where that's going to come at the moment. But what's interesting with BHP is around $35, at least 5 times for October and November, that acted as a ceiling. So if we can get a close above 35.04, which was the October high, then that would be very, very positive for our market and clearly see us break through the Monday's highs that I talked about. The other situation is China. Of course, everyone's focusing on the A shares and the Shanghai Composite when they come in at 12:30, you know, just after lunch for us today, and you know, very, very strong gains there, given that that they've removed basically a ceiling that involves insurers investing in banks. That's really good because it basically increases the profitability or the potential profitability for some Chinese insurers, and that's been one of the major reasons why we've seen this continued derating of the Chinese index over the last 3 years. The PE now on the Shanghai or the A share is actually lower than what it was during the GFC. So, you know, very positive. The measures that potentially are going to take place on the urbanisation and all the sort of tax reforms, again, we'll potentially see them target a higher GDP than the 7.5% set. So what we want to see today is a potential, are we going to see follow-through buying on the Chinese market today? So that could kick us into life when that reopens at 12:30. And I think you're going to have a look at banks. And I'm trying to wonder where this weakness is potentially going to offset BHP. But yesterday, good strong buying in the banks. Again, that yield play very much in focus. The moves in copper commodity prices aren't great, to be honest. I mean, WTI is down about $1 from where we closed yesterday. The price of gold's about $8 lower than where we were. And there was a note from Goldman Sachs overnight suggesting the end of the cycle in gold, which I think is going to get a lot of attention in the next 24 hours. I don't buy it myself. I don't think it's as worrying as perhaps what if you actually read the note, it's not as worrying as as the headline suggests. But ultimately, you know, we've got a pretty flat open. The employment number today at 11:30 could spur some life, especially into the discretionary sector if we do see a strong number. But yeah, pretty flat open today. We're calling up about 5 points at the moment.
Great. Thank you so much for that, Chris, and we'll chat to you through the session. Thanks so much. Chris Weston.